Hello, I'm Stuart Heath, founder and CEO of Harvard Grace Capital, with just another sort of current events post today about U.S. Treasury yields. It's actually the talk on most of the financial media because nobody understands what's happening. If we look back here to this point, that's where the Fed's cut their interest rates, the Fed funds rate, and at least for a week or so, it looked like the Treasury 10-year note was going to follow suit. But since then, it's actually gone up and up and up and up. And here earlier in January, it was just as high as then after 3 Fed cuts, and it was almost up over 4.6, where it was over 4.6, and nobody understands why. What are the pressures? Why is that causing? And the reason this is important is because most of your real estate financing is based upon the 10-year note. It's because most of us are not banks and we can't go borrow from the Fed at the Federal Reserve rate. We borrow at market rates that are always tied to the 10-year Treasury. So what's driving this up? We had a little bit of dip down here in December, and then January it just shoots back up again. Now what's interesting is over the weekend, as we change this chart to a 5-day, over this weekend it's come back down to 4.4 and is settling a little bit higher than that. So we're way off of our highs of 4.65. At one point we were almost all the way up to 5 back in December and January. And so what's driving this? So what are the things? We had the spike Thursday of last week that was tied to the inflation announcement, which was really just a market's indication, market's realization that the Fed's not going to be cutting rates anytime soon because inflation is not under control. So what's happened? Well, I personally think, like it or not, there is this major emphasis in government efficiency and cost saving and cost cutting, and I think that the Treasury markets like this because ultimately the Treasury is an obligation of the U.S. federal government, and all we do is borrow more and more and more money every week with no end in sight, and so the markets get to be somewhat concerned over our ability to repay. So anyway, that's interesting. I'd love to hear your thoughts as to what you think's driving the Treasury notes, because I can promise you all the talking heads on the financial media, they don't really have a clue. Thanks for watching.